I'm Charlotte McLeod with the Investing is Network, and here today with me is John Ciampaglia, CEO of Sprott Asset Management. Thank you so much for joining me online today. It's great to see you again.
Nice to be back.
Really nice to be picking up with you. And I realized when I was getting ready for this interview, we actually haven't talked for more than 6 months, about 8 months since our last interview. So many things have happened in the uranium sector since then. I wondered if we could just begin by having you pick out any big highlights from that time period, maybe talk a little bit about sentiment as well in the sector.
Yeah, actually, I remember our last call very clearly because I was actually in Saskatoon and I was on my way to visit one of Cameco's mines in Athabasca Basin. So it's pretty hard not to forget about that experience. And Cameco obviously has been very front and center in terms of a lot of the news flow. But just going back to, sentiment, I think sentiment is obviously very important. It tends to have a very large role in the day-to-day flow of markets. And right now, I think uranium is kind of caught in the backdrop of a very bullish scenario in terms of the fundamentals. But, the backdrop it's being caught in is, banking failures in the United States. Everyone's still waiting for some kind of a pivot or a pause with Federal Reserve policy. And unfortunately, the last, I would say 12 months now, uranium has been caught in that whirlpool. So it's very frustrating to investors because they see the contract book of future uranium deliveries continue to grow by a huge amount. Last year, we saw the largest amount of uranium purchased by utilities in the last 10 years. And that's a great signal to us that utilities are actually restocking inventories because they're running them down. And I think more importantly, they're thinking more positively about their operations and the government support that they're receiving in many countries. And obviously the potential risks that I would say are still lingering in the market with respect to the threat of sanctions against Russia and different services, potential supply disruptions, coming from, places like Kazakhstan, which unfortunately have historically shipped most of their uranium through Russia. So, it's unfortunate that we're still caught in this negative macro backdrop, but the uranium story still remains very bullish, and the price of uranium has been incredibly resilient relative to other commodities, which have sold off pretty hard in the last few months on recessionary risks.
Okay, so we have really a lot of things that we can follow through just from what you've said there. Maybe where we will stick to begin with is with the investor side, because I think you hit the nail on the head with what investors are feeling right now. They're looking at the continued positive developments in the sector, and they're wondering why aren't their stocks moving. So for you, it sounds like that relates back to that macro backdrop, which is weighing on pretty much everything right now. So do we need to see that improve before we see the stocks perhaps start to move?
Yeah, I think it's critical. I mean, we have been in a very range-bound market for a while now. It's just like people don't know which way the markets are going to break, whether they're going to break to the upside or whether they're going to break down. And when you have that kind of decision tree scenario, I think people's reaction, and I talk to many institutions around the world, they're sitting on the sidelines. They just don't want to make any big portfolio decisions given the uncertain path that they see in many different equity markets. I think the other proof point that we pay very close attention to is the inflows that we see in money market funds. I mean, think about a year ago before the Fed started tightening interest rates. You probably got a few basis points per year of interest in a money market fund. Now people are getting 4.5%, 5% in money market funds, which doesn't sound a lot in a robust market environment, but in an environment of a lot of uncertainty, people are grabbing the 5% risk-free asset, and we've seen upwards of $5 trillion parked in U.S. money market funds alone. And I think that there is a lot of money sitting on the sidelines, whether it's individual retail investors or very large institutions. They're all waiting for signals for some kind of pathway forward in terms of which way is this market going. Are we going to have more bank failures and a kind of contagion effect really, put pressure on equity markets, or is this more of an isolated situation?
Right. And I think now is probably a good time to get an update from you on the Sprott Physical Uranium Trust, which I think a lot of people look at as a bit of a bellwether on the sector. So continuing to add pounds, although at a slower rate than it first started out with, of course. I believe around 61.7 million pounds is the level it's at right now. So any details that you can share there that might help investors understand what's going on in the market?
Yeah, so the trust had a very busy month of January as expectations of lower interest rates really pushed a lot of markets and commodity prices higher. And then those expectations have turned south in the last few months, and many commodity markets have sold off. The price of uranium, believe it or not, over the last few months has actually gone up. I think it's one of the few commodities that we follow that you can say it's up on the year. Now, the trust is actually trading at a fairly wide discount to its net asset value. And again, this is a function of this general macro kind of risk-off sentiment right now with financial investors. So you have end utilities that are very concerned about buying enough uranium and pushing the price up around $5-6 per pound so far this year. Yet the trust is trading at a discount because it's a reflection of where market sentiment is amongst financial intermediaries and investors. And I think there's a real disconnect between the two. So, it's something that we think will correct over time, and the fundamentals will eventually catch up to the way spot is trading right now. But we've been definitely a lot more quiet in the last few months. We've not been buying uranium. Who's been buying uranium? It's mostly been utilities, which, you would expect them to be the single largest buyer of uranium because they're the end user. But we've also seen some producers come into the market from time to time to buy in the spot market. And just a few days ago on Friday on the recent Cameco earnings call, they announced that they need to buy several million pounds of uranium in the spot market in 2023 to kind of backfill some of their inventory position. So we see utilities back in the spot market. We see some producers buying in the spot market, and that's definitely helped underpin the price of uranium this year, which is up about $5-6 a pound.
Right. And let's talk a little bit more about utilities because people are always interested to hear what they're doing. It's one of the most opaque parts of the market that maybe your average investor can't see. So what are we seeing there? We know that they're buying. You've been speaking about that. To what extent, I imagine that they still have lots more buying to do, even if they have been buying. So can you situate us in that context?
Yeah, it's a really important point because obviously the utilities require about 180 million pounds of uranium each and every year. So they obviously have significant inventories, but every month you're basically running your inventory down if you're not procuring. I think utilities are finally starting to figure out that the prospects for uranium look much more bullish, and the prospects for nuclear energy remain much more bullish than the situation 2 years ago. So you see these utilities with nuclear facilities doing incredibly well. They're making a lot of money again. They're receiving government support and different financial incentives, and they're getting extensions, in terms of operating life extensions, and all of that will obviously prompt them to secure more uranium for the future. But it's a little bit mixed. In our experience, some utilities are being more aggressive than others in terms of reloading their inventory positions and procuring, and others have been a little bit slower. The other wild card in all of this is obviously the potential threat of sanctions. And a couple weeks ago in The Hague, there was a nuclear fuel supply conference that happened. And I think the takeaway from that conference was the market is still in a very tight supply position, that there is increasing pressure growing on utilities to move away from Russia as a supplier. We don't think new agreements are being signed between Russia and Western utilities, but they're clearly taking delivery of legacy contracts. And I think governments, a number of them in the G7, clearly signal that they want that to stop over time. And that's going to require a lot more capacity in the West, not just uranium mining, but conversion and enrichment steps as well along the fuel chain cycle.
Just one more note on the utilities. So you had mentioned we got Cameco's latest results recently, and there's a line in there where they said something along the lines of they want to be more selective when they're signing these contracts with utilities, which I found interesting. And I wondered if you could shed some light on that, because we've heard for so long that we need to have utilities come back into the market and buy, and that's what's going to start driving the uranium market, or one of the things. Now it sounds like maybe the companies are in the driver's seat a little bit more. So what are your thoughts there?
Yeah, well, if you think where we were 2 years ago, in the contract negotiations between utilities and uranium producers, I mean, the balance of power was clearly skewed to the utilities. You know, the price was basically stuck at $28 a pound. There was a large supply overhang, and there was no catalyst that the utilities could see in front of them in terms of any kind of a shift back to nuclear energy. So there was no urgency. And obviously, when you have years and years of low commodity prices and abundant supply, you form this expectation in your head that's just going to continue on forever. It's just the trend continues. Obviously, the world's changed dramatically in the last 2 years. Energy transition is a real secular driver in terms of driving countries and economies to net zero. We think nuclear energy plays a big part in that transition. Governments have clearly shifted their preference back to nuclear energy after basically ignoring it for a very long time. We look at all the different public sentiment and support surveys that happen around the world, and support for nuclear energy has really shifted. And unfortunately, it's because the costs of their energy and commodities and utility bills have gone through the roof in the last year. People are starting to rethink the role that nuclear energy can play. But I think everything has changed, and when you have a sector that's been starved of capital for a very long time, that is not invested in a lot of exploration and development, a lot of the projects from the last 10 years are finally starting to move forward after being on ice for many years. It's going to take time, and there's still risks that there could be shortages over time unless we bring new production online. So we've seen lots of brownfield, meaning existing mines that have been on care and maintenance finally come back online. Obviously, Cameco's been the big winner there in terms of restarting one of its flagship mines. We're seeing lots of other smaller companies restarting their operations this year and next year. That's really important because these companies are finally going to have revenue coming in again, and that's really important for the ecosystem. But the big gap in supply is still to be solved, meaning we need new mines, not just restarting old ones that have been on care and maintenance. We need some large-scale mines to come online in the next, let's call it 6 to 10 years. And those aren't going to be done with uranium at $53 or $54 a pound. Those mines are going to need $70 or $80 or $90 or even $100 a pound to actually become a reality. And I think that's what most investors are betting on, is that the incentive price will achieve a rate at which those greenfield projects will finally come online and create a lot of value creation opportunities for some of these exploration companies and development companies that people are currently invested in.
I think that's definitely what a lot of people are waiting to see in the sector. They want to see those new projects start to come online at the hopefully higher price level. And I want to ask a little bit more about price. So I think companies that are signing contracts right now also want to make sure that they get the best value for the material that they're selling. So I wondered if you could talk a little bit about how they structure their contracts. It seems like usually there is now maybe more of an attachment to the current spot price, right, when they sign these contracts. So can you shed some light on that?
Yeah, I think you're raising a really good point, and it kind of speaks to how much the market has evolved. These contracts are often done bilaterally. They're often confidential, so you never really get the full picture, which I find frustrating, as well as many investors in the sector, because they're very powerful price signals that everyone would love to have, and unfortunately we don't have that clarity all the time. But you would often hear utilities 2 years ago talk about being able to come to the spot market, buy as much material as they wanted at whatever price they wanted. They really were in the driver's seat. That's changed. When you mention this point about some of the producers being selective about contracts. I mean, that's basically code for we're not giving it away, and this is a scarce resource, and we're only going to sell this at the right price. And what that means is basically you're going to be paying not fixed prices like the last few years. You're going to be paying market reference prices so that when we ultimately deliver this material to you, whether it's 2 years or 5 or 10 or 12 years forward, you're going to pay whatever that market price is, or it's going to be based on some kind of a mechanism with a cap and a floor. And, these caps are obviously moving much higher than where the current spot price is. Because the reality is the producers want to capture that price, gain if it plays out in the market, which many of them do. So I think the utilities are basically, they've been conditioned, I think, to accept the fact that the dynamics of the uranium market have changed a lot. The days of these fixed price contracts are behind them, and that they have to basically pay up if they want security of supply. And I think that's, an important shift, and it's really critical to the long-term health of the sector. Because, if these uranium producers continue to get, I'm going to use the word shortchanged in terms of the price they receive for the material, what incentive do they have in their stakeholders to continue to expand operations and replace depleted assets? There is none. And then you run the real risk that there is a permanent structural deficit in the market. And so I think, the utilities understand that the producers are partners and that they have to pay fair prices based on today's realities. And inflation, unfortunately, is quite high when you're talking about big capital intensive projects. And the last point I would make is that the fuel costs for running a nuclear power plant are actually incredibly small relative to the fuel costs to produce the equivalent amount of energy, let's say, at a natural gas-fired power plant. And so if you're a nuclear power plant, the price of uranium is really insignificant. You really shouldn't care a whole lot. You're more concerned about making sure you've got fuel so that your plant is running all the time. And, I think it's a very different shift in mindset that the utilities are finally getting around to shifting to.
Very interesting. And I think that's definitely really important, as you've been saying. I want to look at demand at the country level, because the last time we talked was before the winter, and I think we still had the energy crisis in Europe really top of mind. It seems like they managed to get through the winter, and that's faded from the headlines a little bit. But I wanted to ask which countries you think are really doing a good job of bringing uranium into their energy mix and pushing it forward, even though we might not have that immediate concern hanging over our heads.
Yeah, it's a good question. I think Europe was saved by the weather last year, and I think it's very dangerous to think you're gonna be able to continue to rely on an abnormally warm winter going forward. So I would argue that the energy crisis in Europe is far from being solved. Countries like Germany, who have made the poor decision to close their last 3 nuclear power plants the last 2 weeks, is still burning an enormous amount of coal and has a terrible carbon footprint relative to some of its neighbors. But, I think if you were to ask, okay, which countries have been the most progressive in terms of pivoting back to nuclear energy, I think the United States, gets first prize. The financial incentives, the open, direct dialogue from the Department of Energy and the Secretary of Energy, it's abundantly clear that they want to be leaders in nuclear energy again, particularly with advanced technologies. I think Canada's done a pretty good job. We don't have nuclear energy across the country, but where I live in Ontario, we've broken ground on the first small modular reactor. But other countries have done pretty important U-turns with their energy policies, including France, the UK, South Korea, and Japan. And then I would finish with China, because China is really the growth story here, and to a second degree, India. China and India are probably going to build the most number of new large-scale power plants in the world over the next 20 to 30 years. They're very focused on this technology. They obviously have incredible energy needs, and they also are largely dependent on coal today, both countries. So as they try to wean themselves off of coal, Yes, they're doing it with wind and solar, but nuclear is really what's going to make a huge difference to them. So I think China is going to beat everybody in terms of new builds and new capacity. China General Nuclear in the last couple of weeks stated that they are going to be part of a massive expansion of nuclear energy capacity in their country as they try to decarbonize.
I think the next question that I want to ask is about uranium at the global level, changing acceptance. What are we going to see in terms of, with the Russia-Ukraine war, we've seen countries recognizing the value of bringing their supply chains internally, right? Being more national. But will we need to see more of a global working together effort in order to really make nuclear power work at a global level? What are your thoughts there?
Yeah, I mean, just in the last couple weeks, the G7 made an announcement, essentially reiterating a commitment to each other and a cooperation with respect to nuclear energy and fuel, because they're all trying to basically wean off of Russia, and they realize it's important to do this, but it's going to take several years to implement. I think the wheels are in motion right now. We, in the United States, for example, in this month, we have a major facility restarting called Comberdine, and that's a conversion facility. It's part of the nuclear fuel cycle, and this is really an important step to basically reshore some of these services away from Russia. And I just going back to your point about changing public sentiment, it's happening. It's happening in Canada, the United States, Sweden. I hope this new movie that's being aired right now by Oliver Stone, that's very pro-nuclear, helps to change some of the attitudes and misperceptions and misinformation that I think, unfortunately, people have with respect to nuclear energy, because we do believe it is part of the solution. It is a critical mineral. It is being added to the critical mineral lists in several countries, and we finally think it's getting the recognition it deserves.
Do you have any final thoughts that you would share on uranium with the audience?
Yeah, I would say remain patient. If you're invested in the sector, I think sentiment right now is rock bottom. We look at a lot of different measurements and barometers, and we talk to a lot of people around the world, and I can tell you it is really washed out. I don't think sentiment has been this way in the equities, the uranium-related equities, for a long time, particularly the juniors. And I think the juniors have really been beaten up here in this negative macro environment. The producers obviously are somewhat protected from some of this just because they're further along in their life cycles. But it's, I think you have to stick to your conviction. I think you have to stick to a longer term view. It is a volatile sector, will continue to be. But, just keep the faith, I would say, and look for opportunities to dollar cost average if you're interested in the sector. But, I think the fundamentals are going to play out. It may take longer than people originally thought, but I think it is moving in the right direction.
Luckily, I do think there are a lot of uranium investors out there who understand the story and know that they do need to be patient. So hopefully they can hang on just a little bit longer. Thank you so much for being here today to go over what's going on in the market. This is really helpful.
Thank you for having me.
Of course. And once again, I'm Charlotte McLeod with the Investing News Network, and this is Ciampaglia with Sprott Asset Management.